As always, seek professional help to see if a loan product is right for you. Consult with an accountant or financial advisor for personal advice.
You took the whole business model and pretty much just focused on the self-employed part.
Self-employed I love, it's because they're entrepreneurial. They're the backbone to our economy. When you're self-employed, the bank will go off what's your current tax return. Now you might be 10 months into a new financial year and your business has doubled or tripled, and you supply your last year tax return and the bank says, sorry, you only made $80,000 last year.
You don't actually fit the criteria, so therefore we're going to load the interest rate or load the risk fee. You can just see it's a pure money grab. So here we are today with CEO and founder of Rate Money, Ryan Gair. Came across you many, many years ago, very inspired by your journey to where you are today, and I'd love to hear more about it.
Thanks, Jules. Appreciate you inviting me here today. So I've been in the finance game now for 21 years. I fell into it in my early 20s, actually 20 years of age, and I enjoyed finance from the very first day that I started in it. I love property, I love home loans, I love growing property wealth for customers as well. So a little bit about myself is I started out as a BDM at a company called Mortgage House. Was a BDM for around about 10 or 15 years and then moved into becoming self-employed myself. So from there I started writing home loans. I was a loan writer at Rams for roughly 6 or 7 years, and then decided to make the full plunge and become self-employed myself. So I had a Rams franchise for 2.5 years, and in that 2.5 year period, we settled $1.8 billion and decided from there to venture out and actually franchise and start my own business, which is called Rate Money. So Rate Money has now been going for 5 years in July. We started out with 3 people. It was myself and 2 others when we opened the doors. We now have 32 franchises around Australia. We have roughly around about 170 people in our network. And to date, we've settled roughly around about $8 billion in loans. And we specialise in the self-employed sector.
So Ryan, tell me a little bit about this self-employed space. Obviously, you saw something there that quite clearly now a lot of people missed or walked over.
Yes.
Because Rams were known basically for self-employed loans.
Yes.
But as I understand it, you took the whole business model and pretty much just focused on the self-employed part.
Yeah, self-employed is something that I have specialised in now for around about 10 to 12 years. Self-employed I love, it's because they're entrepreneurial. They're the backbone to our economy, they really are, and they're the ones who are out there putting their neck on the line to grow not just their own wealth, but also Australia as a whole, with employing staff, investing back into the country. And I'm self-employed too. So dealing with a like-minded sort of person is something that has always inspired me, and being able to build relationships and have great relationships with other self-employed Australians is something that I'll cherish forever.
In your experience dealing with self-employed people, what have you found are some of the biggest hurdles that the self-employed people find?
Yeah, so a lot of self-employed people, and these days for the self-employed who are in sort of that, I think it's Gen Y, who are sort of in their 30s, that are a little bit more open-minded and they go and see a broker, or they're happy to search on the internet for different solutions. The biggest hurdle that we have found with generally sort of the 50-year-old and above is a lot of the time they just go to the bank. They've been banking with them for 30 years. They go to a bank, the bank says no, and they don't think that they can actually buy a property, or they can't refinance or whatever it might be and get their financial goals. So that has been one big hurdle, and educating self-employed that there are multiple options out there for them to actually get their finance needs. And that's on a full doc basis, or that can be on a low doc basis. Commercial, we have a no doc basis, or different sorts of home loans that suit the customer for where they are in their financial position, or where they are in their journey, where they want to get to over time as well. So that's been a big hurdle in educating the self-employed people out there, is you don't have to just go to a bank, and if the bank says no, that means you can't borrow money.
And would you say there's something that's common amongst all of the applications that you see with the self-employed people, or is that painting with too much of a broad brush?
No, it's definitely painting that with a broad brush. I think every single home loan, I call it a puzzle, and there are all different bits and pieces that you need to put together. So every single home loan application, everyone's different. Everyone's in a different journey. Everyone's in a different spot. Everyone has different sorts of incomes, different structures. Some have multiple businesses. Some are just sole traders. So that is one thing that we enjoy at Rate Money, is because we specialise in self-employed, being able to cater and tailor a home loan solution to each and individual customer.
Obviously, your role's changed now as the business has grown to 32 franchises, did you say? 32 franchises, huge team, and but is there any loan that particularly that stands out that you remember? Any puzzle, effectively, that stands out for you through your career so far that stands out as something that you're proud of, or something that was out of the ordinary, something that you really needed to put your thinking cap on to get over the line?
Yeah, I think for me, one of them was where a customer had multiple businesses, multiple trusts, and being able to decipher that income and being able to structure the loan. And we actually restructured the whole entire loan, which we'll speak about later. It was all cross-collateralized, which I'm not a big fan of. And being able to get their rate from, I think it was around about 7.5% at the time, down to 4.5%, but also have a clear map of knowing exactly how much equity they had in each property, how then they can borrow against that properties or those multiple properties over time again, without it affecting the other properties that they have as well, if that makes sense. It's being able to structure the loans so they can continue to buy a property over time.
One of the biggest challenges I've found as a self-employed borrower over the years is that there is a combination of advice when you're self-employed. You have many different advice places, or places that you're receiving advice. You know, your accountant's giving you advice on how to structure the assets so that they can protect them from all sorts of intrusions or attacks from externally. You know, self-employed people wear a bit more risk than the average than the average borrower. So, you know, the accountant's advice is one thing, and then you've got to go across and then you've got to relay that information to a bank. Now, in my personal experience with my structures and things like that, I've found it very difficult when you go to a bank and you have somebody assess the credit or assess your position on the other side. I'm not entirely sure they're 100% up to scratch with what's going on. A lot of them perhaps have never been self-employed before.
Correct.
And they can't understand, they can't put it together.
Yes.
So it's great to have that solution, but super frustrating when you're self-employed, going to the bank and perhaps having your file assessed by somebody that just doesn't have the business nous or acumen that the person that's borrowing the money has. Super frustrating. Great that we have that solution available to self-employed people now.
A lot of the time when you're self-employed, the bank will go off what's your current tax return. Now, you might be 10 months into a new financial year and your business has doubled or tripled. And you supply your last year tax return and the bank says, sorry, you only made $80,000 last year. But you know that you're on track to make $200,000 this year. But the bank says, we'll come back when it's the new financial year and you've completed those tax returns. Where there's options out there as well for the self-employed is what's called a low doc loan. And that's what we specialise in. Now, low doc lending, people think that's huge rates, that's huge fees. Oh my goodness, that's a shark loan. I've heard about these low doc loans and I want to steer clear. It's so far from the truth of what a low doc loan is. A low doc is a residential home loan that goes for 30 years, regulated like every other bank in Australia. Where that actually helps is you don't have to supply your tax returns. And where we've come in and really shaken the market up is that we've removed risk fees. So banks and lenders out there used to charge a customer what's called a risk fee. So let's say you borrowed $1 million, the bank would say, fine, we'll give you that $1 million, but we're going to charge you 1.5% or 2% risk fee, which is $20,000 or $15,000 because you don't have financials. We thought, well, what a joke. They're self-employed. They've been in business for 10, 15 years, no defaults. So we remove the risk fees for all of our applicants, and the interest rate is roughly only around about 1.5% difference to what you're getting on a full doc loan.
Yeah, fantastic. Look, completely understand that, because without mentioning names, definitely I know through my experience many years ago as a broker and personally, every now and again you'd put an application through and then you'd hear back from the lender saying, look, you don't actually fit the criteria, so therefore we're going to load the interest rate one or load the risk fee. And you can just see it's a pure money grab.
Correct.
And it's super frustrating for the borrower. And like you say, self-employed people shouldn't be set so far behind the 8 ball or simply treated differently or with more risk than any other person. So yeah, it's great to see that somebody's come in and leveled the playing field. And so on that, Ryan, when you came up with this idea, you saw a gap. Obviously, you need to talk to funders to create funding lines and things like that. When you were knocking on those doors, what was the response like? Were you warmly welcomed when you said, look, I've got an idea, I'm going to disrupt this, I'm going to come up with these options? How was that received? Did you knock on a lot of doors and have them slammed in your face at first? Or tell us a little bit about that journey.
Yes, I had a pretty clear vision in how I wanted to structure this rate money business. I saw an opportunity that self-employed sector was still being shoved aside, so to speak, and not being looked after correctly. And it wasn't quite as simple as going to knock on a few funders' doors and say, I've got this pipe dream and we're going to franchise my business and we're going to be able to settle X amount of loans with you and whatever else. So it was a hard slog, but also as well, I wanted to make sure that where we got our funding from, we were able to remove the risk fees. I was a big advocate of not charging customers risk fees, and also being able to tailor a product which is exclusive to Rate Money, which would make us stand out in the marketplace. So we did knock on a few doors. We do have exclusive funding, and that took a while to actually get off the ground. It was about a 6-month process. But after that 6 months where we could show that we had robust systems, customers, those sorts of things, that's when we were able to tailor products for the self-employed and then go to market with it.
Yeah, I can just imagine, and I could be completely wrong because I haven't been in that business for a long time, but I can just imagine the big banks or the guys sitting on top of the funds that need to be distributed and the rest of it saying, Ryan, what are you doing?
Yeah.
Why would you want to take away this great money-making opportunity for us without the risk fees and the rest of it? So in actual fact, you're actually a real champion of the people, a real champion of self-employed people. And I don't know if that message has been gotten across, because that's giving self-employed people, putting the odds back in their favour again.
Yeah, that's exactly right. And the way that I saw it was a pure money grab. That was it. It was for the shareholders' bottom lines or the owners' bottom lines, and that wasn't really looking after the customer, and that's what we're all about.
Yeah, fantastic. I think that's a real testament to the business, and it's a great message that people need to hear about the reason why Rate Money is the place to go if you're self-employed. The journey of a self-employed person is that they are all uniquely individual, as you say. What do you see that Rate Money franchises do well? Is it that they can get to know the self-employed person's business and structure a loan for the future, as well as their direct and immediate needs? Because going to borrow money these days seems to be progressively becoming more of a job than it's been, perhaps 5 years ago and 5 years before that. What do you feel like the Rate Money guys do really well when it comes to providing advice to their self-employed clients?
So 98% of our customers are self-employed. That's what we live and breathe on a daily basis. We don't market ourselves as the jack of all trade, that we can do everything out there. That's what we've built our business on. So our franchisees are in the same spot as the customer because they're self-employed as well. So a like-for-like sort of person speaking to each other really get to understand the customer from day dot or on that initial phone call, because they're self-employed as well. So they understand a lot of the time these self-employed customers have a business to run. They can't take 5-6 hours out of their day to go and do a home loan application. They're wanting someone who can actually give them the answers there on the spot, clear and precisely, but be able to look after their finance goals. Why, guess what? that self-employed person is off running their business, making money for Australia and themselves, but also as well being able to reach their business goals with refinancing or purchasing property.
So you mentioned property investment. Property investment in Australia is great. It's fantastic. It's one of the best games to be in, right? Obviously, Property 360, that's what we specialise in.
Yep.
So is there any steps that self-employed people should take as per your advice at Rate Money to navigate the process to set up the structures correctly for self-employed property investment?
Yeah, absolutely. It's the great Australian dream, and it still is.
Yeah.
Obviously, different parts of the world are quite heavily into the share market, but Australia is all still about property, and we see year-on-year property growth. So I always, and when I do speak to somebody who is looking to buy multiple properties, the big thing is going to speak to someone if they don't know property themselves, in all honesty, is go and speak to someone who can actually help you along that property journey. Is it that you've got a little bit lesser income, so you need high rental yield properties for you to be able to buy another property again? Is it that you got great cash flow and you're looking for property growth and growing your property in value? Or is it that you're looking for a sustainable income with high rental yields for those yields to be able to pay off your investment properties without you having to tip in too much cash? So when we do speak to a self-employed customer, we also speak to them, well, this is what you're wanting to do now, but this is how we need to ensure that your loan is structured correctly, so the next time that you go and buy a property again, it's easy for us to revalue those properties, use that equity in those properties for you to purchase the next one again. So from the initial outset, we always speak to a customer, are you looking to buy a property in the future, or is it just the short term? Or are you happy with just your owner occupied? Because some people are, but these are all the questions that we need to ask to ensure that when they do come back for finance again, the loan's set up correctly from day dot.
I can imagine that when a self-employed person comes to you, they may generally be sort of in one of two camps. One, where they don't have a great deal of advisors around them, or two, they do have a great deal of advisors around them, depending on the size of the business. And so what I mean by that is, you know, they may not have a lawyer, they may not have an accountant, or those types of things. Would you say that the Rate Money franchisees and the team there, they are a great point of contact because they have these available resources, because they're dealing with so many self-employed people? They're probably dealing with a lot of accountants, they're dealing with a lot of lawyers and the rest of it. So if somebody doesn't know what to do next, a Rate Money person, are they able to sort of show the way, shine a light on the best way through, perhaps even make some introductions or get them some good advisors wrapped around them for their journey?
Yeah, absolutely. So we are all about referrals with Rate Money. So we obviously have a lot of accountants, other brokers that refer to us, solicitors, conveyancers, and those sorts of things. And the real upside being a franchise network is that they're dealing with people in their local area. So they are able to put an accountant or a conveyancer or whatever that might be in touch with someone locally as well, which is a lot of self-employed people still are happy to deal over the phone, but they want to know that someone's local if they need to pop in and have a chat and whatever it might be. So the answer is yes.
So Ryan, what would you say are some of the more common or costly mistakes that you see for investors or borrowers in this self-employed space?
One of the most costliest thing is people go and buy property before they've actually gotten a pre-approval. I've seen many a time where someone has actually gone and purchased a property, not thought about can I get finance or not, and they've lost a 10% deposit.
Wow. Brutal.
Brutal. So that's a common factor of what we see in our finance game is we say to everybody, go and have a chat and get yourself pre-approved, or go and speak to someone that specialises in, right, the sector that you're in, either self-employed or just in finance. Go and speak to a finance broker and ensure that you can borrow that money before you go and give a 10% deposit away.
Absolutely. That's one of the most common things that we tell all of our clients. Like, the first place that you need to go is you need to get some advice. And to buy a property, unless you have cash, and not many people have cash anymore, in fact, they're trying to get rid of it as fast as possible, you need a loan. If you're self-employed, you need somebody that knows their way around self-employed. You know, we've seen some of our clients work with some of the biggest and best brokerages in Australia, only to find that they've cross-collateralized 3 properties, struggled with the concept of self-employed loans. That's not taking anything away from them. I guess the point I'm trying to make is, if you're self-employed, the message is there's a home for you and you need to be with specialists. You know, we've personally seen not all finance brokers or mortgage brokers are specialists. And if you're not a specialist, you have to be careful if you have specialist requirements.
Yeah, absolutely. And I think the other biggest, I guess you'd say, pitfall is some people are very savvy in the property market and they research it and they have the time to research it. There are others that just go and buy in an area because they think, oh, well, I know that area because that's where I used to live, or I live around the corner. And then 4 or 5 years down the track, they haven't got the growth that they're looking for. So we do see that as a pitfall, and they can't believe that their property is not worth more than what they were expecting when they purchased it. So we do see that as a common factor as well, of people buying property without really putting the research in. And then the next thing you know is their property journey and building that property wealth comes to a bit of a grinding halt.
Yeah, look, I mean, property does, as a whole, you do seem to feel like it's a safe bet. But I've seen plenty of horror stories where people have not bought correctly, bought the wrong type of property in the wrong type of location. And yeah, people still do lose money on property.
Of course.
So from the self-employed property investors that you work with or have worked with, is there something that you've noticed that sets apart the more successful ones to the ones that get the average or mediocre results?
Yeah, definitely. I think it's like anything in life. It's the big visionary ones that seem to do well, who don't sort of sit there and contradict themselves saying, should I buy now? Shouldn't I buy now? When should I buy? Should I refinance my property to buy an investment property? I see so many people, and very well-educated people who are even close in the finance game. And 3 years down the track, they still haven't bought a property. And they go, I can't believe property's gone up 30%. I can't believe. And they think that there's this magical time that they're going to buy and the market's going to drop 50% and they're going to get a 7% rental yield. And as you say, it's Hail Mary. It's not going to happen. The best property investors and the best people who have built wealth through property is they know that there's going to be ups and downs. They're not here to make money tomorrow. They're here to make money in a medium to long-term journey, and they know it is a journey. So they know that there isn't always going to be the perfect time to buy. They know if I buy a property, that will allow me in X amount of time to borrow against that to buy another property again. So they're the ones who have been the most successful.
Yeah, look, I know in my personal experience, interest rate has some part to do with it, but it doesn't have everything to do with it. So if I'm looking at, a small development site, a subdivision or something along those lines, I need to be able to act quickly. If I can get the money at a low doc rate or a self-employed rate that might be 1, 2, even 3% higher than what a full doc loan would be.
Well, I hope it's not 3%, Jules. You're going to the wrong place there.
Well, obviously not with rate money, and obviously way before we met you. But that's not the biggest factor for me. If I'm going to make a few hundred on the top end, I'm not too worried about paying a little bit more in interest rates. And I think in this current market, for a very long period of time, cash flow looked great when interest rates were low. Cash flow doesn't look so great at the moment now, but there is talk of rates going down.
Yeah.
Now, we're not here to predict the future, and that's not what this is about. But when the talk of interest rates is going down, I actually think now is a really good opportunity for people to buy. Sure, the numbers may not be as attractive as they would be cash flow wise towards perhaps the end of the year. But once those rates come down, what you're missing, what you're paying extra per month is going to be translating into hundreds of thousands of dollars extra you're going to be paying on the top end. Yeah. So once the interest rates have come down and everybody moves off the sidelines, it's very fast for the market to pick up 10, 15, 20%. The percentage.
No, 100%. And that's what we're seeing now is exactly that. Is we're seeing those savvy investors knowing the short-term pain for the long-term gain is now and has been sort of over the last sort of 6 to 8 months. That's where we started to see those investors come out of the woodwork, getting themselves pre-approved, off looking to buy an investment property again because they can see the light at the end of the tunnel. And that's what I mean by that is the ones who aren't looking always at now, they're looking at into the future.
If there's any one piece of advice in your journey in this self-employed space, and in particular for property investors, what would that one piece of advice be? Or it might be a piece, some advice set out in pieces, perhaps.
Yeah, no, absolutely. Have clear set goals.
Yep.
Right? Do not be afraid to take a risk.
Yep.
You've never seen a successful business person or someone that has multiple properties who haven't taken a bit of a risk and what they call bite the bullet. Don't sit there thinking, I need to pick the most perfect time in buying a property. If you have the opportunity to buy a property, go and buy property. It's the same that I say in business as well, is have a clear goal, have a clear vision, but don't have a million spreadsheets that end up contradicting each other and you do nothing. If you want to build property business, have a clear vision and go for it.
And conversely, or in addition to, as a self-employed person that's now the CEO of a business that's much bigger than it was when it started, do you have any advice for people out there starting out in the business world?
We've got a big spray painting on our wall at work and it says, believe to dream. It's not dream to believe. So what does that actually mean is firstly, you got to believe in yourself. You must believe in yourself, you must believe in your business, and you must believe in your vision. Then your dreams will come true. If you sit there and say, I'm dreaming, guess what? It will only be a dream. So as Arnold Schwarzenegger said, the dream, you've got to believe. And I completely and utterly agree with that as well. So set a clear vision, set your goals, and don't be afraid to go and put everything into it. And we are going to take risks. That's part and parcel of growing, and we are going to fail. And failing's fine because it means we're pushing ourselves. And don't beat yourself up because you failed and you tried something. It's learn from it and go again.
What a great piece of advice. What a great piece of advice. Okay, so we're just going to wrap this up now, Ryan, with a few rapid fire questions, just so that people can get to know the real Ryan.
Right, we got 60 seconds. Let's go.
60 seconds. Here we go. Worst thing you bought, Ryan?
Worst thing I bought was my very first property at the ripe old age of 20. Was a place up in Blue Haven. I got $70,000 worth of capital growth over a 15-year period. It was not good.
Not good. Best thing you bought?
Best thing I bought would have been probably my property in Camaray. I bought an apartment in Camaray and that was able to really set off my property journey. I got some amazing capital growth over a 2 or 3 year period out of that.
Somebody that inspires you and you look up to?
Someone that inspires me and that I look up to, it must be, I'll have to say my chairman. His name's John Studdard. He's a little bit older than me, but not too much older. He's in his mid-50s. Someone who's been there and done it, and he's still helping me, guide me along my journey as well.
Something that you'd like to buy. It might be a luxury or something on your mind, Ryan, something that you want to acquire.
I've always said that if I could ever buy, I'd love to buy a helicopter one day, but the wife said no. I mean, that's a long way away. But I think I'm not much of a water person. I would love to be able to just jump in my helicopter and fly somewhere.
There's a long history of property developers and wealthy individuals in Australia that have bought light planes and helicopters, and unfortunately, it hasn't ended well for them, so your wife might be onto something there,
yeah,
right?
I think she is, especially with my driving record.
Yeah, they're very smart. Ryan, thanks for coming in today. Super inspiring story. I really wish you the very best of success and to keep seeing you climbing and doing what you're doing. Thank you very much for coming in today, mate.
Thanks, Jules. Thanks for having me, mate, and I look forward to watching you over the next 10 years as well, mate.
Thank you very much. Cheers. Bye-bye.